Welcome back to Talk Tickers, the show where we like to take these earnings calls and really just kind of break them down, for everyone listening at home.
Absolutely.
And today we're diving into Chemours Q4 2024 results.
Yeah.
And let me tell you, there's a lot to unpack here.
Definitely a mixed bag this quarter for Chemours. I mean, some segments are doing really well. Others are facing some headwinds.
Right.
Overall, though, they did beat expectations for the quarter, but the full year picture tells a bit of a different story.
Yeah, their full year profit for 2024 actually dipped a little bit compared to 2023, coming in at $786 million.
Right.
Down from $1 billion the year before.
$1 billion.
So there are a few factors at play here, right?
Yeah, exactly. We're seeing pricing pressure across really all of Chemours' business segments.
Okay.
A bit of a hit from those unfavorable currency exchange rates. And then there were increased costs, particularly in their thermal and specialized solutions segment, or TSS, as they call it. TSS is basically their refrigerants business, which is, a big deal for Chemours right now.
Okay, so let's dig into TSS, because that seems like the most interesting story here.
Yeah.
Refrigerants are such a hot topic these days with all the regulations phasing out those old school Freon types.
Right.
So is that what's driving the growth for Chemours?
Absolutely. Chemours is really betting big on its Opteon line of refrigerants, which are designed to be much more environmentally friendly than those old Freon types. And this strategy is paying off.
Okay.
We're seeing huge demand for Opteon, driven by regulations like the US AIM Act and the EU's F-gas regulations.
Yeah.
These regulations are essentially forcing the industry to ditch those older refrigerants that are really damaging to the climate.
So Chemours is kind of like the cool kid on the block, offering these good refrigerants that everyone needs now.
Pretty much, yeah.
Okay.
Their TSS segment hit record sales in Q4, thanks in large part to a 23% year-over-year jump in option sales.
Wow, 23%.
Yeah, it's pretty impressive. They're even having to expand production capacity to try and keep up with this demand.
Okay, but there's got to be a catch, right? What's the downside here?
Well, remember all those older refrigerants that are being phased out?
Right.
Chemours still sells those too. And there's kind of a glut in the market right now.
Okay.
As everyone tries to, unload their old stock.
Right.
And that's pushing prices down, which is squeezing their margins a bit.
Okay, so it's a two-sided coin for Chemours right now.
Yeah.
On the one hand, their eco-friendly option is just booming.
Right.
But on the other hand, their legacy Freon business is taking a hit.
Exactly.
What about their other segments like titanium technologies or TT and advanced performance materials or APM? What's going on over there?
Those are a bit more complex.
Okay.
TT, which is essentially their titanium dioxide business,
Right.
saw sales decline both compared to last quarter and compared to a year ago. Seasonality, regional mix, and just softer pricing are all playing a role there.
So not exactly a glowing report for titanium dioxide.
No, not really.
What's the story with APM then?
APM saw weaker sales too, mainly due to softness in some of their key markets.
Okay.
Especially their Nathian membranes for the hydrogen market.
Okay.
But there are some bright spots.
So good.
They've got a newly built production line for high purity Teflon PFA resin, which is used in the semiconductor industry.
Okay.
And that's showing some promise.
All right, so they're trying to diversify it a bit.
Yeah.
Tap into these other growing markets.
Exactly.
Are there any other major developments we should know about?
Yeah, they're also undergoing a strategic review of their European assets.
Okay.
Likely looking to streamline their operations there. And then there's that upcoming trial in New Jersey related to some legacy environmental liabilities that investors will be watching closely.
Oh, right. Yeah.
Yeah.
We'll have to dig into that.
Definitely.
Okay, so sounds like there are a lot of moving pieces here. Yeah. Let's try to break down each of these segments in a little more detail, starting with the Superstar option and the TSS segment.
Okay.
What exactly makes these option refrigerants so special?
Well, you have to understand that the traditional refrigerants, the Freon types, have a pretty significant impact on the environment. They contribute to global warming, ozone depletion, all that bad stuff.
Yeah.
Option, on the other hand, is designed to have a much lower global warming potential.
Okay.
So it's considered a much more sustainable alternative.
So it's not just about, complying with these regulations.
Right.
But it's also about appealing to consumers and businesses that are increasingly concerned about their environmental footprint.
Exactly. That's a huge part of it.
Okay.
And that's why we're seeing this huge surge in demand. I mean, think about it. Everything from supermarkets to data centers, relies on refrigeration.
It's right.
And as these industries transition away from those older refrigerants, Chemours is really well positioned to capture a big chunk of that market share.
So what kind of market share are we talking about here? Could Opteon become like the dominant player in the refrigerant market?
It's definitely possible, yeah.
All right.
Some analysts predict that Opteon could capture over 50% of the global market for low GWP refrigerants by 2030.
Wow.
Which would translate to billions of dollars in potential revenue for Chemours.
Okay, so big money, big money.
Yeah.
But you mentioned earlier that there's still some margin pressure in this TSS segment.
Right.
So how are they managing that?
Well, they're taking a few different approaches.
Okay.
First, they're really focusing on operational efficiencies, trying to squeeze as much profit as possible out of every unit of Opteon they produce.
Makes sense.
What else are they doing? They're also trying to leverage their market position to push through some price increases on Opteon.
Okay.
I mean, the demand is clearly there.
Right.
So they do have some pricing power, but they have to be careful not to price themselves out of the market, especially with competition heating up.
Right, because other companies are jumping on this sustainable refrigerant bandwagon too.
Exactly. It's not just a Chemours game anymore.
So it's a balancing act.
Yeah, for sure.
Okay. Let's shift gears a bit and talk about their other segments.
Okay.
Starting with Titanium Technologies, or TT.
Right.
You mentioned earlier that this segment is facing some challenges.
Yeah.
Can you elaborate on that a little bit?
Sure. So titanium dioxide is a key ingredient in a wide range of products, from paint to plastics to paper.
Okay.
But it's a cyclical business, meaning it's heavily influenced by economic conditions.
Right.
So when the economy slows down, demand for titanium dioxide tends to weaken.
Okay.
And that's what we're seeing right now.
So it's not necessarily a reflection of Chemours' performance.
Right.
It's more about the broader macroeconomic environment.
Exactly. But Chemours isn't just sitting back and accepting this fate.
Okay.
They've launched what they call the TT Transformation Plan, which is a major cost-cutting initiative aimed at improving the profitability of this segment.
So they're essentially trying to make the business more resilient to these economic downturns.
Exactly.
What exactly does this TT transformation plan entail?
It's a multi-pronged approach.
Okay.
They're streamlining their operations, consolidating some facilities, implementing various efficiency measures. They're also negotiating better deals with suppliers and trying to optimize their pricing strategy.
So they're pulling out all the stops to try to turn things around.
Pretty much.
Have they set any specific targets for this plan?
They have.
Okay.
They're aiming to achieve at least $60 million in additional cost savings in TT by the end of 2025.
Okay.
They've already exceeded their initial cost-saving target for 2024.
Oh, wow.
So they're off to a good start.
Sounds like they're taking this challenge seriously.
Yeah, they are.
What about their advanced performance materials segment, APM? You mentioned some weakness there too.
Right.
Particularly in the hydrogen market.
Yeah, APM's a bit of a mixed bag.
Okay.
Their Naphthalene membranes, which are used in fuel cells for hydrogen-powered vehicles, haven't taken off as quickly as some analysts had predicted. The hydrogen economy is still in its early stages.
Right.
There are still some technological and infrastructure hurdles to overcome.
But it's more of a longer-term play for Chemours?
Exactly.
But not necessarily a major driver of growth in the near term.
Right.
Okay.
However, there are other areas within APM that are showing some promise.
Okay, good.
Remember that new production line for high-purity Teflon PFA resin?
Yes.
That's targeted at the semiconductor industry, which is booming right now as chip makers ramp up production to meet the soaring demand for electronics.
Right.
Chemours is well positioned to benefit from that.
Okay, so they're trying to diversify, tap into these multiple growth markets. It sounds like they're hedging their bets.
For sure.
Trying to create a more balanced portfolio.
Exactly. And they're also taking steps to optimize their global footprint. They're currently undergoing a strategic review of their European assets, which could result in some divestitures or restructuring.
So really trying to trim the fat and focus on the areas with the most potential.
Precisely.
Okay.
And they're also keeping a close eye on regulatory developments, particularly around PFAS, which are a type of chemical that's facing increased scrutiny due to potential environmental and health concerns.
We've talked about the opportunities and the challenges facing Chemours.
Right.
What about the risks? What are the biggest things that could derail their plans?
Well, the biggest risk is probably a further deterioration of the global economy.
Okay.
If demand for their products weakens significantly, it could put a serious dent in their profits, even with all their cost-cutting measures.
So they're somewhat at the mercy of macroeconomic forces that are beyond their control.
Exactly.
What else should investors be worried about?
They also face some potential headwinds from rising input costs. The prices of raw materials and energy are volatile right now.
Right.
And that could squeeze their margins.
So they're walking a tightrope here.
Yeah.
Trying to manage costs while also investing in growth and navigating this complex regulatory landscape.
Exactly. And then there's the elephant in the room.
Uh-oh, what's that?
That upcoming trial in New Jersey
Oh, right.
related to legacy environmental liabilities.
Yeah.
This is kind of a hangover from their history as a spin-off from DuPont, and it could result in some significant costs for Chemours.
Okay, let's talk about that trial then.
Okay.
What's the background there, and what are the potential implications for Chemours?
Well, that's the million-dollar question, isn't it?
Chemours
Is a company with a lot of potential,
Yeah.
but also a fair amount of risk.
Right.
On the positive side, they're a leader in sustainable refrigerants with Opteon, which is poised for significant growth as the world moves away from those old Freon types.
All right, Option seems like the real star of the show here, but their other segments are facing some headwinds, right? Particularly titanium technologies with that whole economic slowdown situation.
Exactly. And we can't forget about that New Jersey trial looming on the horizon. Potential for a big payout there could really put a damper on things.
So how should investors weigh all these factors? What are the key things to watch for moving forward?
I think the biggest thing is execution. Can Chemours continue to ramp up Opteon production and meet that growing demand?
Right.
Can they successfully navigate the pricing challenges and maintain those margins? And can they make meaningful progress on their cost-cutting initiatives, particularly in the titanium technologies segment?
Right. It's one thing to have a great product, but it's another thing entirely to actually deliver on those promises and execute effectively. What about the regulatory landscape that seems like a constant wild card, especially with the whole PFAS situation?
Absolutely. Investors need to keep a close eye on any developments related to PFAS regulations.
Okay.
If we see more stringent rules or more lawsuits, it could have a significant impact on Chemours' bottom line.
So it sounds like Chemours is a bit of a high-risk, high-reward type of investment.
Yeah.
There's a lot of potential upside, but also some significant downside risk.
That's a fair assessment. It's really going to depend on your risk tolerance and your investment horizon.
Right.
If you're comfortable with a bit of volatility and you believe in the long-term story of option and sustainable solutions, then Chemours might be worth a look.
Okay.
But if you're more risk-averse,
Right.
there might be safer bets out there.
All right, great insights. I think we've given our listeners a lot to chew on here.
Yeah, definitely.
Any final thoughts before we move on to our This Is Not Financial Advice segment?
Just to reiterate, Chemours is a company in transition.
Okay.
They're making some bold moves to position themselves for the future, but they also face some significant challenges. So investors need to do their own research, weigh the risks and rewards, and make an informed decision that aligns with their own investment goals.
Well said. All right, let's have some fun now. Time for our This Is Not Financial Advice segment where we throw out a totally wild,
All right.
but maybe, just maybe, kind of plausible trade idea.
I love this part.
Okay. Here's the scenario. Imagine Chemours decides to really lean into this whole sustainability trend
Okay.
and spins off their thermal and specialized solutions segment, the one with Opteon, into a separate publicly traded company.
Interesting. A pure play sustainable refrigerant company that could definitely attract a lot of attention from ESG-focused investors.
Right.
Especially if they time it right.
Uh-huh.
Maybe right before that New Jersey trial kicks off to kind of distance themselves from the PFAS liability.
Exactly. It could be a way to unlock value, attract new investors, and maybe even command a higher valuation for the option business.
Yeah.
Think about it. A company solely focused on providing climate-friendly solutions
Right.
for a world that's increasingly demanding them. It could be a Wall Street darling.
I like the way you think.
Right.
Of course, this is all purely hypothetical. There's no guarantee that Chemours will actually do this.
Yeah.
And even if they did, there's no guarantee it would be successful.
Of course, this is all just speculation.
Right.
But that's what makes it fun.
Yeah,
right?
exactly.
It's about thinking outside the box, exploring the possibilities, and maybe stumbling upon a brilliant trade idea.
Absolutely. It's all part of the game.
All right, folks, that wraps up our deep dive into Chemours' Q4 2024 earnings call. We covered a lot of ground today, from the soaring growth of Opteon to the looming shadow of that New Jersey trial. Hopefully we've given you some valuable insights and some food for thought.
As always, do your own research consult with a financial professional. And remember,
Look, this is not financial advice.
precisely. It's just a fun, insightful conversation about a company that's navigating a complex and ever-changing world.
Thanks for joining us on Talk Tickers. We'll catch you next time with another earnings call, another company, and another wild trade idea.